Okay, welcome back, and this is the second video in trading wedge breakouts. In the first video, we talked about how to identify these patterns, and so from here, what we're going to cover now is just how to trade this breakout. Okay, so where do we enter the market? And one thing here to start is a lot of traders get themselves wrapped up in the idea that these patterns have to break in a certain direction. Now, if we just zoom out here to get kind of a context of where this pattern formed, you can see here that we did have a recent uptrend in the market. So the market moved up this way in a nice stair-step pattern. It then formed this wedge, right? Now, a lot of traders get themselves into trouble because they think that this pattern has to break to the upside, right? Because it's a continuation pattern. Now, 70 to 80% of the time, that is correct. This pattern will, after the market makes a move up, consolidate, move sideways, and then break to the upside. But I'm a huge advocate on waiting for the market to show you what it wants to do. In other words, wait for the market to show its hand. And what that means is, if we zoom in here, again, we have our levels drawn, and from here, we're really just waiting for the market to tell us what it wants to do. So as the market was forming this pattern, when we see the market starting to really put pressure on this lower level, and then we get that break, which happened right here. All right, so this candle, as soon as this 4-hour candle closed, we had a confirmed break. All right, so this pattern was broken. Now, there's a couple different ways to enter this market. You can either wait for a retrace back to this level as new resistance. So in other words, you would wait for this break here, right? That's step number one. The second step would be to wait for a retest of this level as new resistance. That would be step number two. Now there's one downside to this, and that is that, as you can see here in this case, we never got that retest, right? The market found resistance here, started moving sideways, and then eventually broke lower. All right, so what I like to do is, as long as this break is not, way down here, I like to just enter at the market as soon as this bar closes. So let me zoom in here and show you. So as soon as this market closed here on this 4-hour bar, I would just enter at market and sell this break here. And again, if the market had, let's say that this bar had moved all the way down here and closed here. Now, I'm not going to sell that because that's a large distance, right, between these two areas. So what I would want to do is, when this bar closed down here, I would want to wait for a retrace at least back into this area. Now what that's going to do is it's going to give me a lot better risk to reward ratio, because when I place my stop up here, which we'll get to next, it's going to give me a lot better risk to reward when I go to sell this market for a move lower. All right, so again, to recap this, we have a break of support. So we would sell here, and we would look for a move lower in the market. And again, we really want to make sure that we're staying patient and waiting for the market to show us which way it wants to go. All right, so it's really important that we don't get ahead of ourselves and look at this pattern and say, well, this market is likely to break to the upside, so therefore I'm only interested in looking at a break to the upside, because if we had done that, we would have missed out on this move. All right. So that's it for this one, guys. Join me in the next lesson. We'll talk about where to place your stop loss.